Okay, here's an interesting one called Aimia. It is an investment holding company in Canada listed on the Toronto Exchange. I was alerted to this one by my buddy Dan, so thanks very much for this tip, Dan. This is a company that I think Ben Graham would be very interested in. I personally am not buying it. It's not my type of company, but I thought I would put it out there for anybody who's interested in these sort of buy a dollar for 50 cent kind of asset plays. Okay, so this is a investment holding company. Basically, they try and find private or public companies to invest in, and well, in a nutshell, this is very simple. They just had a big sale of one of their assets, and now they have cash and marketable securities of $576 million. Contrast that with the market cap of $358 million, and you can pretty much see what the thesis is here. So they have a price to cash of 0.65, and if you add in their current investments, which brings the equity value up to $832 million, their price to book is less than 0.5. Right? So you're buying. I mean, let's say you bought this whole company for $348 million, you would get $576 million in cash, right? So that's a cool over $200 million you can make if you could just buy this company out at this price. Now, the reason I'm not buying it, because I've gone through their holdings and I don't see a huge amount of upside here. I don't think that there's like the investments. Maybe they can buy and sell some of these bits for more than they bought them for, but I don't see a lot of growth here. One of the holdings is Clear Media. This is a Chinese company that does bus shelter ads. It makes good cash flow, but as these old kind of media plays, like it looks like the COVID really messed up their revenue, so it's kind of hard to figure out. But I think that the revenues are declining slightly year over year. The last EBITDA number I see was 2020 EBITDA was 500 million yuan. Before that, it was 800 million. So I don't really know where they're at right now. But the company has valued their holdings at 62 million. They originally paid 68 million for that, and they say they're using an 8 times EBITDA valuation to figure that out. So you can kind of see what the EBITDA might turn into. And they own, I think, 11% of this company. That company is obviously worth something. It looks like it's pretty high cash flow, but again, I don't see a huge amount of upside there on their 62 million. I don't know if that's really going to move the overall $800 million equity needle or the market cap. Then they own a company called Cognitive, which is a loyalty rewards platform that are used by other brands. So like you go on to, I don't know, one of these companies' sites, they join our rewards program. They use the off-the-shelf product from Cognitive to track those, to deal with those rewards programs. But they don't really own the company. They own convertible notes that pay 12% interest, and well, I guess if they convert them, they will own part of the actual business. But for now, they just own debt that pays 12%. TradeX is another company they own. That's a cross-border sort of car selling platform. It looks like it's mostly Canadians selling cars to the US. This is their biggest holding. They've got 48 million preferreds, which looks like it's the equity in the company, the actual ownership of the company. They say they've got an 10.8% stake there. They've also got 37 million in convertible notes at 8% interest, and those are also convertible into preferreds. And that was last December, so I don't actually know what happened there, but they may have converted them into more preferreds as of now, or they got the cash. Now, just quickly on TradeX, a long time ago, I used to drive cars from Vancouver to Seattle. This company I worked for would buy them in Canada and sell them in the US. And this is a pretty good business if the exchange rate works. So the Canadian dollar has to be weak for this business to work. And then if the Canadian dollar strengthens, I think a lot of this business dries up. So you might be able to play a currency game here, like wait till the Canadian dollar is strong and then maybe look at this company. I'm not sure the TradeX value would go down. Just an idea there, but I do think it's a good business. I don't think that kind of business is going anywhere, especially because the Canadian market is so much smaller than the U.S. market. You have a big buyer that's somebody's usually willing to buy in the U.S. What else? So I think there's not much under the hood here in terms of the companies they own. Like they have a small investment company called Middlemen that seems to be valued at 4.5 million. But I'm looking at the returns from this company, and I doubt. I think they're probably hemorrhaging clients based on the last 10 years of results. So this doesn't look like a fantastic investment from where I'm sitting. So all of that up, maybe there's upside in cognitive. TradeX looks like it's probably a stable, good business, and same with Clear Media. But I don't think that these are big enough positions to really move the needle for Aimia. So I don't know I'm not sure. I don't think that there's a lot of upside here. So the real question is, what are they going to do with the cash? Right? You got over 500 million in cash. What are you going to do? Right? So if we knew that, then this could be a good investment. If they're going to do a big special dividend, that's a buy. That's a reason to buy. If they're going to do buybacks, that's also a reason to buy. They have bought back 8 million of the shares recently, which is about 10% of the float. So it's possible they see this. Well, I know that I'm almost guaranteeing that they see this this discount to net asset value. But what are they going to do about it? So they're going to keep buying back stock until it gets priced properly? I don't know. Or are they going to deploy the cash to buy more companies? And my guess is they would do that because the whole point of this business is to invest, right? So why would they close up shop by essentially using all their cash to do buybacks or pay it all back to shareholders? So my guess is they're probably looking for other ways to deploy this cash, but who knows? I haven't looked into it too much. Maybe you guys know more about this, or maybe you're interested to look into it a bit more. But I just thought this was really interesting because basically this is a great example of a Ben Graham buy 50 cents or buy $1 for 50 cents. So yeah, if you have any comments, if you know anything about this business, why don't you put it in the comments if you don't mind. But for now, I'm not interested in this. I just thought I'd pass along the idea. And thanks so much, Dan, for the idea. I appreciate it. See you guys in the next video.